What's up, everyone? It's Eric with Option Edge, and tonight we're looking at Apple. So I put on a trade in Apple based off a back testing result from Trade Machine Pro that I like to use. So I'll show you the back test, and yeah, let's get into it. So if you open up a trade that expires in 30 days, so when I open this up, it was open this trade. What was the date? 11/5. I opened this trade. History on the 4th. So this was only a day ago I opened this trade. So if we look at the back testing result, I'll show you the technicals. So there was actually technically no technicals, but all it was opening up this trade 25 days before earnings, and not just a call, but we're doing a call spread. And basically I looked at some of the different delta combinations. So here you see buying a 50, selling a 30, buying a 40, selling a 20. Like what this was, it's buying a slightly out of the money call and then selling a further out of the money call at the 20 strike. So if we go into Apple, I will show you what those strikes were, and we'll look at the risk profile on that. So if we want to buy so this time it's a little bit higher than 40 delta because the trade moved in my favor. Okay, and then we're going to sell the 149 call. All right, so if you can see this, looks like our break-even point is going to be at 144, almost 145, okay? And the max we can make is if we go all the way up to that higher strike, we can make $423. Since I put this trade on earlier, I think the max profit was about $600. So you're risking basically 2 to make possibly 6, okay? And the max drawdown is obviously the debit paid. So let's go back here. So I think this is going to be a successful trade because, one, if we look at past earnings runs, we look at the RSI going into this is the relative strength index, which just shows measures like overbought, oversold conditions. The higher the RSI, the more overbought it is. The lower the RSI, the more oversold it is. It's an indicator that tends to be better at telling you when a stock is oversold, because sometimes when a stock is overbought, it continues to rally, and you can see that sort of happening here. It was oversold, and it never really fell down until after it hit the 70 mark. That was July. It didn't fall for a couple months later. But the oversold tends to be a very strong indicator for buying. Here, it sort of was oversold here and went further down, but then eventually made a turnaround. Anyway, I'm just showing you how same thing here. This is continued to go down, but anyway, what I'm trying to say is that in past before earnings in the past, the stock has been more overbought. So I think this is a good opportunity because, one, Apple's been on a major decline down, and the seasonality of the stock market around September and October tends to push stocks down. So earnings are in November. So I think by the time we're done with September finally, and October might be a little bit more red, but I think by the time we get through October, this stock is going to be heading to the upside. Conversely, maybe this stock is going to approach the 200-day moving average. Who knows? But I like that historically, using the backtesting data, that I can look at this and say, hey, this is a good time to get long Apple. And I'm using a risk-defined strategy by using a call spread that helps to mitigate my theta risk and lower my break-even and increase my probability of profit. Okay, so that's just a trade idea. As always, this is for educational purposes only. And if you like this stuff, please subscribe and like the video. Alrighty, thank you. Peace.